We did get the minutes from the Federal Reserve's July policy meeting, which seemed to suggest potential tapering here in the works come the end of the year in terms of scaling back their asset buying. I want to bring in Brian Cheung, who's been watching that part very closely. And of course, Brian, we're going to get a lot more Fed talk next week at Jackson Hole. But walk me through what specifically we heard in the minutes and what we've seen transpire in the market since.
Well, Kiko, to be perfectly honest with you, walking through it is fairly difficult. I've seen a lot of Fed minutes, and the ones that we got yesterday, again, covering that end of July FOMC meeting, were some of the most scattered minutes that I've ever had to parse through during my time covering the Federal Reserve. And that's just because there's such a diverging views on the FOMC, again, the Federal Open Market Committee, about how to approach a possible tapering of its $120 billion a month pace of asset purchases. But this is the money quote that I want to show you from the minutes that we got from the Fed yesterday. Quote, most participants judge that the standard set out in the committee's guidance regarding asset purchases could be reached this year. Now, this is how the minutes phrase everything that's detailed in those meetings. They use most or several or few or some, which of course doesn't really tell you exactly how many of the 18 members feel a given way. But obviously, when you see most implying a majority, that does show that there is a bias, at least as of July, the end of July, towards tapering sometime this year. Now, of course, the question is, how is any of that new, right? We've been hearing a number of Fed officials come out over the past few weeks, and likely also at the Jackson Hole conference next week, saying that they would prefer to have some sort of tapering sometime soon. Even among the doves on the committee, I'm thinking of San Francisco Fed President Mary Daly and even Chicago Fed President Charlie Evans, who said, although they want to see multiple employment reports before they get to a decision on pulling back the pace of asset purchases, they do think it's on the table to do something later this year. Now, of course, again, nothing new from those minutes, but it's pairing all that commentary in addition to the jobs report that we got for July, which we got for in that first week of August, which does show greater than expected payroll adds in that month. So when you put those two things together, maybe that does show a little bit more of a hawkish tilt when it comes to the Fed approach to tapering. Of course, when we look at the calendar of what could be coming next, again, Jackson Hole is going to be next week. That's not a policy setting venue, so there wouldn't be any sort of announcement from the Fed chairman, although he's making a speech. This is purely more of an academic conference. Those real policy setting meetings would come the end of September, the first week of November, and then the middle of December. The question now is, if it is indeed going to happen, the tapering, sometime later this year, which one of those three meetings is it going to be? That's going to be the main discussion as we look towards Wyoming next week, guys.